Every single day, the Forex and in fact all financial markets have a daily agenda. Price has to move from point A to point B. Money has to be transacted. Orders have to be filled. And if you go to any chart on any financial market, you are going to see that there is movement every single day, right? And our job as traders is to utilize all the information, all the tools and all the data that we can get access to in order to determine where could the market go in the next, either in the next 15 minutes, in the next hour, in the next 4 hours, in the next day, week, month. And this pretty much depends on your trading style and the type of trader you are, right? In this video, I'm going to share with you a very powerful tool that you can just simply implement this into your trading strategy, and it is really going to help you to potentially forecast the daily range better, forecast where could the market potentially go today, and the same concept can also be used for the weekly range. So I'm going to teach you a couple of concepts right there. I'm going to provide you with a specific strategy and specific examples also that you can implement into your trading plan, and I'm pretty sure that you are going to be mind blown from what you're about to see. So make sure to stick around all the way till the end. Take a notebook, your trading notebook, or open a Word document and start taking notes, right? Because we're going to have an amazing educational video today. Welcome to the Trading Fanatic channel. It's Ilya here. If it's the first time you are tuning in, this channel, it's all about trading in a sustainable, consistent, and transparent manner. I'm going to be sharing more on wealth creation, stock investing as well. So make sure you're subscribed, turn on the notification bell in order not to miss all the future updates. And if you already did it, I'm excited. Let's jump into the video. All right, let's get started. So first of all, I'm gonna lay out some pretty foundational concepts that you must understand before utilizing this strategy. So this is why it's really important for you to pay attention, stick to every slide, take notes, and really try to solidify those concepts, because I'm gonna share with you some great stuff, right? First things first, let's start by identifying what exactly is the Asian session range and why is it important. Well, pretty much the Asian range is the price action that develops during the Asian session. Simple and straightforward. I'm going to be sharing with you specific timings and specific tools which are going to help you actually identify it, right? The Asian session is usually defined as a low volume session. Now this might not be entirely true. Why? Because for example, Euro USD is pretty quiet during Asia, depending on what is happening during that session. Sometimes we can have like an overnight news event or an overnight macro event when the Asian session is like really big. But the majority of the times, Euro USD or Pound USD or another pair like this is going to be just ranging, consolidating, and not making too much of a move, right? But for example, if you take a pair like Aussie JPY or NZD JPY or even Aussie USD, those are going to have a bigger movement during that session. So again, it really depends on the pair, right? And the currency that the pair consists of. So make sure to keep this in mind, okay? But let's say that mostly the Asian session range will be consolidating and ranging and accumulating for a move during London and New York, which in my opinion are the best sessions to trade, right? You can just pick one of those and you can simply crush it, right? Again, so what does a range and accumulation mean? I'm going to explain this in the next slide, so stay tuned, because actually understanding what that means is going to help you to understand why the Asian session range is also so important, okay? Well, pretty much it generates liquidity. What is liquidity? Well, those are any type of orders, right? So this could be stop losses, this could be stop orders like buy stop, sell stop, limit orders as well. So pretty much above and below each structural level or range, there are orders. And I'm going to explain this in the next slide. So stay tuned, okay? And these liquidity points are utilized to fuel the daily move, right? So if you go to any chart, and I'm sure that you have actually spotted this, every single day, the market is going to trade outside of the Asian range. So there is no day that the market actually stayed within the Asian range, both during London and New York. No, it usually exits outside of it. So what our task is to identify in which direction it is going to exit, right? And in which direction it can potentially go. So this is what we're going to actually see in this video, okay? And the daily range usually initiates after the completion of the Asian range. So after the Asian session ends, the Asian session range is completed, then we usually have the daily range being filled, which we're also going to have a look in a bit, okay? And pretty much we're going to look at the concept of range, manipulation, expansion, and then a pullback, which is pretty much how the daily range looks like. Right now, let's pay attention to what is a range and why a range is important. Okay, so I have drawn like a pretty basic range right there. And again, it's not really perfect. So usually in a range, you're not going to have it pretty much a textbook up, down, up, down, up, down. Right? You're going to have different interactions in between, and usually there is a middle line of the range in which you do not want to trade. Okay, you would like to trade from the top or from the bottom. But right now, we're not actually here to teach how to trade ranges, but we're here to know why our range is important. Well, as I told you, above and below every single structure or every single range, there are orders. If we take this resistance level on top, imagine this is the Asian range. Above right there will be buy stops of buyers. So if the market actually breaks through this level, there are going to be buyers entering into the market. But imagine that some sellers saw a triple top right there and they entered a sell. So where is their stop loss? Well, it's above right there. So if the market breaks through that level, we're both going to have buy orders triggered in and also stop losses of sellers triggered in, which is also a buy order. So we have tons of buy orders right there if we break above, right? And it's the same as below. People are taking longs from the bottom. Where do they place their stop loss? Below. And of course, there are breakout traders that just have a sell stop below those levels. So if the market crosses the bottom, you're having the stop losses of people that are buying from this level, right? So they get a stop loss, and you're having the sell stops of potential sellers entering into the market, right? So it's really important to understand this, because this is pretty much the concept also of manipulation. Many times you're possibly seeing that the market just manipulates a range, creates a big move. You think, okay, right now it's going, but then immediately just crushes back down. And I'm going to show you why this actually happens. Okay, so hopefully this is clear. Above and below every single range, there are orders. Of course, depending if it's on the top or on the bottom, you can have both stop losses, but you also have buy stops and sell stops, and even sometimes limits. Okay, so very important to understand. Now, what is the market's daily agenda? As I said, every single day the market moves. Each day capital has to flow. Banks have money to move, invest, hedge, orders to fill, all of this great stuff, right? We as retail traders do not have access to this, but what we do have access to are the charts, which in my opinion, the charts are just the best representation of price you can get. And if you understand the charts, you're set, right? And usually the daily range is going to look like this. We start with Asia, which, as I said, it's pretty much a consolidative session. Then you have a very sharp pump outside of this range during London, which is most of the time manipulation, which we're going to learn also how to trade. And then we're having an expansion to the downside. Usually there is the dead hour right there, which we have like after lunchtime, and then just before New York opens, we're having another little range. And then the market continues with the overall trend during New York. And at the end of the day, we usually have a little bit of a pullback that actually closes the market roughly where it opened. And this is how it looks like. It looks like a heartbeat. So if you imagine the daily candle, it opens right there, pushes into the highs, then massively dumps into the lows, and then it pulls back because people that entered short from right there are going to take profits at the bottom. And this is why usually you have a pullback. Okay, so this is the daily agenda. This is the daily range. And if you go to study every single daily candle, you are going to see that this happens. It happens in different ways though. So here is the second way in which it can happen, which is pretty much a trending scenario and the scenario that you're going to see most often. Okay. So if you already have an established trend, let's say from yesterday, then you're having the Asian session right here. London usually is going to make a fake move. Why? So if you didn't pay attention to the range slide, why is it pushing to the upside? Well, because have a look, there we have a triple top or double top. There are stop losses above and there are buy stops above. So there are many people that enter longs right there. Then they see a hard high. Oh man, we are going long, right? And then the market just plummets to the downside. And what do we have right there? The stop losses of those people that entered longs. And this is what actually fuels the move to the downside. Then, as I said, usually from around 12 to 1:30, 2 o'clock, I'm going to give you timings. We have the dead hour, which is pretty much a little bit of a pullback, a little bit of accumulation after the sell-off in London. And then New York opens and it's usually going to give you another sell-off if the day is about to have a continuation to the downside. And this is how the daily candle is going to look like. Again, like a heartbeat, but the push to the downside is pretty big, right? It opens, manipulates into the highs, creates the daily wick high, and then we push into the lows, create the daily wick low, and then we pull back a little bit to close with a little wick. If you pay attention also to the daily candles, you're almost always going to see that there are wicks on both sides. And this is why. Because if people sold right there, they're going to be taking profits at the end of the day, which actually causes the market to pull back. So this is the daily agenda. What our task is to know how to trade after this one forms. What is going to happen and how to capitalize on both the London move and then the New York move. And I hope in this video and what is about to follow, you are going to develop a little bit of a strategy around this. So first of all, pairs and time. Still, we're having some educational stuff, technical stuff. Bear with me, right? Every pair works with this concept. Of course, as I said, depending on the pair, some might develop at a different timing, have different characteristics, but they all move the same. They all have that same agenda. They all have to move from point A to point B. They all create an Asian range and they all manipulate above or below the Asian range, right? A little tip, you don't want to trade more than 3 pairs, because if you really want to study a pair, if you really want to actually dive deeper to see, okay, how does this pair develop after like Asian session forms? What does it do during London? What does it usually do during New York, right? You cannot really deeply study this if you're trading like 20 pairs. So again, prioritize and focus on less. Less is always more, right? As I said, the best and the most volatile liquid trading sessions are London and New York, right? London trades can be taken from 7 a.m. GMT, which is Frankfurt open. So this is in GMT time. Make sure to mark those timings until 11 a.m. GMT, which is pretty much entering lunchtime and the dead hour that I spoke in the previous slide, where usually the market is going to consolidate, again, create a range. Why? So that the range is actually manipulated during New York and we get another move, okay? Transition into New York starts as early as 12 p.m. GMT. New York opens at 1 p.m. GMT. The stock market actually opens at 1:30 p.m. GMT, which is where actually a lot of volume comes in. And usually I look to stop trading New York around 3 to 4 p.m. GMT, right? This doesn't mean that the New York session ends. This is pretty much the window that you want to be trading New York, right? After 3 p.m. GMT, the London session is coming to an end, which usually brings that final volume in which we can have either one final sell-off in the bearish market or maybe that pullback that I told you about can start initiating, okay? And the Asian session, which is pretty much the most important part of this video, starts from 1 and ends at 5 a.m. GMT, right? So what you want to do is mark this price, mark the price that develops during this time window, right? We're gonna do this, don't worry. And usually 6 a.m. GMT, this is when we close. We have a little bit of a dead hour there. This is usually quiet, and then Frankfurt opens at 7 a.m. GMT, as I told you. Then we start getting actions, and then we actually need to have our analysis done, analyze the charts, drop the Asian range, potentially think of the outcome of the day, and really get into the zone, okay? And as I said, the daily range, the daily agenda is mostly being filled from 5 a.m. GMT, which is Asian close, the Asian session range close, all the way until 8 p.m. GMT, right? So this is why it's not very advisable to trade during Asia, because the Asia might not make a big move, right? Depending on the pair. Make sure again to determine your trading window. You don't want to trade from Frankfurt open to New York close. It's not profitable, I promise you. Prioritize fit trading according to your lifestyle, not your lifestyle according to your trading, right? So this one is a little graph that I shared in a previous video that I make, which I'm gonna leave a card right there. Please open this video and study it, because this one is really important. And if you can actually print this one out, it's great. We have the Asian range, we have the pre-London chart prep, which is usually the little dead hour that I spoke to you about. Then we have Frankfurt, then we have London, then we have lunchtime in which we take a break. Then there is again another little dead hour right there of 2 hours. New York open, there is the window. Okay, so great graph for you to print. Right now, it's time to actually jump into the real stuff. Okay, so how to implement the Asian range into your strategy. First things first, right? Market structure and direction are the biggest key. So if you do not know how to identify market structure, if you do not know how to identify a trend, if you don't have a system around it, this thing will not work for you. You will end up losing trades. If you solely utilize what I'm about to teach you without actually having the foundational knowledge of structure, direction, and some other concepts that can also help you with that, okay? So this is just a complementation to your existing trading strategy, and I hope that you are a master of market structure and direction. If not, consider joining our team because we're going to teach you how to do this. Okay. Secondly, you have to determine a potential outcome according to the structure. Now, again, we go to the first point. What is the structure? What is the direction? And what do you think can potentially happen today, right? If the market is bullish on the 4H, if the market is bullish on the 50-minute, then I potentially expect for the market to continue to the upside, right? Then I look, okay, what is the Asian range? Where is the Asian range? How is it positioned according to my analysis, right? So this is the second point. The third point is to mark your areas of value or areas of interest, as some like to call them. Why? Because you don't want to be trading within the Asian range, usually, right? You would always love to trade from areas of value, either being support and resistance, either being supply and demand, either being structure breaks and retest, either trend lines if you want to. It doesn't matter. In your trading plan, you need to know where are you going to trade from. You need an area of value, okay? So first determine the trend, second determine the potential outcome of the day, then mark your areas of value, and then it's action time. London Open, we usually manipulate above or below the Asian range into your area of value, and then you continue with the overall trend, right? So this is a very simple 4-step approach right there that you can just implement and you can kill it, I promise you, right? But right now, let's actually look into the details. So there are 2 types of Asian ranges that I have identified. The first one is a consolidated Asian range. This is a small Asian range, usually between 20 and 30 pips. This is mainly on EU, right? GU could be a little bit bigger. Aussie dollar could be also the same, around 20 to 30 pips. And it's very important to identify that it's visually ranging, right? It's sideways. It does not make higher highs and lower lows. This is a consolidated AR, so it creates a range, which is pretty much a higher probability Asian range than the trending run, which we're going to look at in a bit. So then what we have to find is there an area of value below or above the Asian range, depending on our trend and market structure, right? And then we just want to wait for price to start to manipulate below or above the Asian range from Frankfurt Open. Okay, this is the consolidated one. The trending is pretty simple. This one is bigger. It's also visually trending, so it's making structure. It's making higher highs and higher lows, or lower lows and lower highs, and it's bigger than 20 to 30 pips, right? Then the difference right here is that we can have an area of value within the Asian range, right? Again, how do you determine area of values? You can check my supply and demand video, which I'm also going to link, but you need to know how to determine areas of value in order to know where are you going to enter a trade from, okay? And if you do not have an area of value within the Asian range, then look outside of it, okay? Which at times could actually be a better setup, okay? And we want to see price starting to push into the Asian range, or outside of it, around Frankfurt Open to London Open. So this is just the basic foundation. This slide, I've given you 4 steps, and I've given you the 2 types of Asian ranges that we are about to study right now. So let's get into it. So again, as I said, we're having a consolidated AR and a trending AR. AR stands for Asian range. So what we see right here is, let's say that the market is in an uptrend, which is again very important. As I told you, we're having an Asian range. What do we have above right there? We have buy orders and stop losses. What do we have below? We have sell orders and stop losses of buyers. Frankfurt opens, the market very sharply manipulates outside of the Asian range, right? People are stopped out. People start thinking that the market is going down, but we know how to identify an area of value, in this case, demand level. We take a long from here, and of course, our first target will be the Asian high, which I'm going to show you in a kind of a simpler way. And the trend, you can see that this one is visually consolidating. It does not make higher highs and higher lows. It's ranging. And this is the trending AR. So what you can see is that we have an uptrend. Push, pullback, higher lows, higher highs being created. Then usually Frankfurt opens, and you're going to have a sharp pull into the Asian range or below it. Somewhere right there. Depends again on the price action and on the areas of value that you can spot. Usually, sometimes it can just retest 50% of the range, but this is your job to do. I share all the details actually in the private community that I have, but what my biggest tip is to actually go and study those things after I actually teach them, okay? So this is the trending AR, usually trending, pulling back, and then again, target is the Asian high, and you can expect the manipulation after Frankfurt Open. So let's have a look at some examples. I have given you a few variants, right? So I'm actually gonna make your job a little bit easier so that you actually have the patterns in your head, and then you can go on the chart and see them, because it's not fixed. the biggest takeaway maybe that you would take either from this video or something that I would like you to remember is that the market is not perfect. You might have your setups, you might have your rules, you might have like textbook setups, but the market is not perfect and it's not going to develop as you think it will. Okay, so keep this in mind. This is variant 1, which is my favorite. Overall ranging Asian session right there. Frankfurt opens, we mark our supply and demand, we mark the trend first of all, we wait for 8 to 10 a.m. for the hunt. There is the hunt to the downside, we enter either aggressively or conservatively. This is why entries are also another part of your trading strategy, right? You enter and you target the Asian high or low. So this is the first variant and there is a little example as well. So right now we are bearish on this pair. In a reversal phase as well from a higher time frame supply as well. This is the 15-minute time frame, by the way, right? So this is the last day. There is also a Asian session right there. There is the Asian range right here. So what is this Asian range? Well, it is slightly bit trending, but it's not above 20 or 30 pips, and it's more or less pretty quiet. Okay, so if we are bearish on that day, right? So what do we want to see? We want to see a manipulation above to take out the buy orders that are above, the buy orders that are also here. Tap inside our area of value, which is right there. We take our trade right here. This is a trade that I took. It was huge risk to reward taken from here. And then we ride it with the first target, the Asian low. There it is. And as you can see, then New York session just continues to drop to the downside. And how does our daily agenda or daily range look like? We'll start from here, range, impulse into the highs to create the daily wick high, massive movement to the lows, and possibly later we have a little bit of a pullback. Okay. So this is the first variant, range manipulation above or range manipulation below for the bullish example and continuation higher, okay? The easiest one to spot and the best one to trade actually. There is a second variant, which you can oftentimes see, right? You're having a ranging Asian range, right? So again, it's not making clearly higher highs and higher lows. It's not trending, it's small, right? We identify, then of course we identify our supply and demand, support and resistance zones above or below it. And even if you have them either above or below, depending on the trend, again, sometimes the market just opens, like London opens, and you just have a massive impulse outside of the Asian range. And this is when a lot of times you can get confused and you can think, this is the manipulation, I'm gonna go short. No, if you're long in the morning and if you see a beautiful break of structure above or below the Asian range, depending on the trend again, follow it, okay? Adapt to it and follow the trend. Right? Of course, it could also be manipulation, but you're going to understand if it's manipulation or not by knowing the higher time frame intentions. And this is why, again, market structure and direction are key. I keep mentioning this, but I really want you to understand this so that you don't go on your charts right now and start taking random trades, right? And usually what you would like to see is the market to then retest, again, an area of value inside the Asian range, which is usually what is going to happen. If you have an impulse during London Open, then you're going to have a pullback, and then potentially continuation, and target is the new high. Okay, so let's have a look how this actually looks like on the charts. I have picked some textbook examples right now just to actually for you to visualize, but later we're going to jump on the charts so I can actually show you how to practice this concept. Again, the market right now is bearish, right? Clearly we can see that it's bearish. We're having this last lower high that was actually respected. The market is pretty corrective. We're having very big consolidation. What is the Asian range? Again, well, it's ranging. It's not clearly trending to the downside. It is overall ranging and quiet. There is London Open. What happens is we have a very sharp impulse to the downside, right? We are bearish, so I don't want to go longs from right there just because the market manipulated below Asia. I want to adapt to it and follow the trend. So what I do is I find an area of value either within the Asian range or maybe a little bit above, depends on the price action, and I enter from there. And as you can see, even after the impulse, you are again going to have a hunt into the most recent supply and demand, support and resistance, whatever you're using, and then the daily range expands to the downside. Okay, so great example right here. So those are the two variants of consolidated ARs. Let's have a look at the trending ones, which are a little bit tricky to trade, right? So trending AR, first variant, we're having an overall trending AR. It is usually bigger, right? It is creating clear higher lows and higher highs, right? Or lower lows and lower highs. Then what we do is we mark what is inside the Asian range, supply and demand, support and resistance, whatever you like to do. And also do, if you are bullish on this case, mark what is inside, but also mark what is outside, because sometimes the market can actually head for the outside zones as well, which is sometimes even a better trade. okay? Then you wait for the hunt around 8 to 10 a.m., right? Usually you're gonna have Frankfurt open, a sharp pullback into the Asian range, or maybe below it, depends on the occasion. Then you enter either aggressively or conservatively, depending on your trading style and your entry criteria. And your first target is once again the Asian high, okay? Let's have a look at an example. There is a clear trending Asian range, right? It's not making clear lower lows and lower highs, but it is big, right? It is trending. Again, what is the trend? It's a downtrend. We can clearly see that the market is moving down, right? The market opened, created a little bit of a high, and then it massively flushed to the downside, okay? So what we have there is the open. So what you have to do is find an area of value within the Asian range, right? So what happens right there is that we do not have a clear area of value, but if you simply utilize this concept that if the Asian range is trending, right, and the trend is down, all you want to do is focus on shorts. Okay, so what we do is we have actually a pullback right there. We have one hunt right there. Then the 15-minute change is structured. This is a lower low. There is your lower high, and there is your push to the downside. First target, Asian low, and then we can see also a little consolidation during the dead hour. New York opens, completes the daily range, and then we have the pullback. Okay, so this is how we trade the trending one, which is within with a retest within the Asian range. Right, usually you're gonna have something. On this example you do not, but again I wanted to show you that the market is not perfect and you're not going to have it every time. Let's have a look at the second variant, which is, as I told you, sometimes the market might respond from the middle, right? You have a beautiful trending Asian range, it's bigger than 30 pips, it's clearly trending, right? What you do is you mark your supply and demand, support and resistance, whatever you're using inside the Asian range and also outside of it, right? Below and above, whatever, depending on the trend. So in this example, we are bullish, okay? So on this occasion, this is the variant 2, the inside is going to fail. Maybe you take a trade, maybe you lose it, that's fine. It's even going to manipulate further to take out the stop losses that are resting below the Asian low, okay? You again wait for the hunt, you enter aggressively or conservatively after identifying an area of value, and then the first target is the Asian high or Asian low in a bearish scenario. So I'm actually providing you only bullish scenarios. I'm sorry for that, but what you can simply do is flip those charts, just flip them in 90 degrees, and you're gonna have the bearish scenario, right? It's the same, okay? And in this example, you're gonna have a better risk to reward because you're getting at a lower place and you're going to target all the way towards the Asian high, which is gonna give you more pips if you entered from the middle, okay? So let's have a look at the example. There it is. So again, what is this market? So again, if we're here in the morning, well, the market is simply bullish. Uptrend starts, we're having a reversal. The full hourly time frame was bullish on this day. We're having a break of structure. The 15-minute is perfectly looking bullish, okay? So the Asian range started pretty trending. You can see it's making our highs, it's trending, it's not ranging, it's pushing to the upside. What I do is I first spot my inner demand, which in this occasion was this one. The market actually opens, hunts inside, reacts, but sometimes it fails, right? Sometimes it's gonna fail, and then what happens is we have a massive sell-off to the downside. So what a lot of people will get wrong right there is, we have a break of structure, we're going down. No, the trend is up. Remember? So as I told you, mark the levels inside the AR and then marks the levels outside of the area, which was this little demand level right there. And what happened on this occasion is we tapped, we failed to break above. All of this right there is orders. So people that are long from here, long from here, long from here, from here, all of them have their stop losses below. The market takes them all out, accumulates, and then it expands to the upside, targeting the Asian high right there. And as you can see, even it continues further during New York. How do you enter in this one? Well, that is the next step, of course, your entries, but there are entries within right there on a lower time frame, or if you wish, you can just place a limit right there, stop loss below, and you're good to go, okay? But I leave the testing to you, okay? So this is the Asian range variant 2. And pretty much that's it, right? I have a few important notes for you. This is just a framework, right? It's not a complete strategy. I showed you some great things right now, but as I keep mentioning, it's all about merging together this concept with market structure and direction, right? Because if you don't get that right, then you're gonna lose money, probably. There is a lot more that goes into this whole thing than just this Asian range strategy, okay? Also, entries are important to master. If you don't know how to enter the market, even if you have your setup developed, then if you don't know how to enter, maybe you enter too early or you don't wait for the right confirmation, you're still going to lose, right? So this is not only it, okay? Once again, man, this is for the 100th time that I repeat this, but master trend identification and market structure first before really looking to update your strategy with more tools and concepts. Backtest and build a plan, right? So as I said in the beginning, this concept is just a tool that you can include in your trading arsenal. It's just a tool. It's not a strategy. It's not the holy grail. It's just a tool that is going to help you, as I said, forecast the daily range and potentially forecast the agenda for the day, right? So hopefully this one was insightful. I think you might have to go back to rewatch all the examples, to take note of them, to go spot them on your charts, to really identify all the little characteristics that I shared about them. Right now, I'm going to go ahead to the charts and I'm actually going to show you how to practice this. And hopefully we're going to see some examples from what we just learned. So let's go. All right, we are on the charts. So first things first, I would like to check for you to check my last educational video, which was on building a trading routine. Okay, because there at the end, I shared all the stats regarding the Asian range and how to implement it on your charts. And I really hope the majority of you have actually done this, so you can just actually start implementing this straightforward. Okay, but pretty much in order to recap, I'm just going to give a short recap for those of you that haven't watched the video, but I really recommend that you do. This is the indicator. It's called Asian Session Range. You go to indicators and you type Asian Session Range. You click on this one by Rob Minty, right? Click on it. And then of course, in that video, I go through my precise stats. I'm just going to go through them very quickly right now so you can copy them on your charts. You can just pause the video, copy them so you can actually have the same Asian Session Range as me. And again, I'm just going to go straight through on the 15-minute because this is where we see this, this concept develop the best. Okay. So let me show you actually an example that I wanted to look at today, right? That I actually missed. It did not provide me with an entry. There is the Asian range, right? I am short bias. Why? Well, I'm not going to go build a big story right now, but we are tapping into a very strong level right there on the left. And also this is around 50% of a daily move, right? So it doesn't matter. We are bearish during the day. So what we have is a ranging Asian range, right? Very good. What is the area above it? It's this one. What happens? The market opens right there. So pretty much Frankfurt open is right here. What happens? Bang. Tap inside, manipulated above Asia, tapped inside an area of value. So what I wanted to do right here is to actually take a trade. I went on the 1 minute right there. I had a limit right there. Stop loss was above, something like this. But the market did not trigger me in, which is not good, right? But what we see is that again, Asian range, manipulation above. Where is the target? Asian low. Bang. And this trade was pretty good risk to reward before actually something really strange happened right there. It was a huge wick. That is today. Okay. Let's look at yesterday. So on this day, we were bullish, right? Why? Because we see all of this bullish price right there. We were at a lower low on the 4H. So we wanted to see the market create this lower high from which we wanted to sell today. Again, very important to actually understand where are you on the higher time frames. We are bullish. What is the Asian range doing? It's chopping around, right? So what I did actually on that day is I spotted my demand level below right there where I wanted to long. But what happens? Here is consolidating Asian Session Range variant 2. The market breaks above it, stays above it, retests, breaks again above it, and then actually comes inside during the hunt hours. It comes inside, it taps into an inside level, and then it just expands, right? So I actually missed this one because I was looking for variant 1, which is to manipulate below the low right there and then to take a long. But as you can see again, this is variant 2 of the trending, of the consolidating, range, pushes outside. Usually, as a little tip, you would like to see a bigger push outside to really see the commitment, right? This one wasn't great. I wasn't actually convinced that this one is a break. This is why I did not take it from here. But lovely long right there. And as you can see again, how did the daily candle look like? We started from there, range, we manipulated a little bit right there, expansion, a little pullback, expansion again, and then we ended up consolidating. So this one was a pretty bullish day. The day before, this one I also missed, exactly the same example as this one. So we're having an overall, right, it's ranging, right? It's not really trending. Yeah, man, it's even above 30 pips. So it's not the best, right? But again, the market is not perfect. So what I did in this moment is I had this zone to enter from, right? I was looking to take all of these orders below right there. But what the market did on the hunt hours is it just actually broke below the Asian low, because again, the Asian low starts at 2 o'clock for me. Did we break it? Yes, right? But usually I would love to see a bigger move below. What happens later? We break, expand, okay? And then of course, after you know what the agenda is, but you haven't taken the initial trade, you can trade continuations because then New York is gonna provide you with another long, okay? Understanding the Asian range is going to help you understand what is going to happen during the day. Okay, so that was this day. Guess what? I also didn't take a trade on that day. What a bummer. On Monday, I'm not sure, but the Asian session is floating right there. So what you can simply do is spot where the 2 o'clock is. So 2 o'clock was right here, and then 6 o'clock. This is the low, and then 6 o'clock looks like this is the high. So this is our Asian range, right? What is the trend? It's bearish. What happens? Asian range manipulated above. Where is the target? Asian low. Textbook, right? This Asian range was slightly bit tricky because it looked a little bit trending, but again, we know that we are bearish, so we want to see manipulation above and then a flush, right? Textbook. This one is strange. We have kind of a trending Asian range that the market opens during the hunt and still stays within, and then it just explodes. Sometimes it happens, right? Some days you're not gonna have the perfect setup. Consolidating, didn't even manipulate above on this time, but again, knowing the daily agenda, knowing that we're bearish, we take a short in New York. I think I took this trade right there. Another example of sometimes not developing as you want, Asian session starts to massively pump outside. So what you want to do, this is actually the example, right? There is the retest, this is the trending example. But yeah, this is EU. Range, manipulation above, massive expansion. Range, manipulation below, right? Massive expansion. This one is trending. Yeah, this is actually the examples that I gave you, but you can go and look them on your own. Range, manipulation below, tap into a level on the left. Where is your target? Asian high, bang, right? Range, trending range actually just stayed within the range, expanded, but if you know that it's long, so you can just continue going long. And again, this is how I actually recommend you to start testing. Maybe we can have a look at AU, right? Just open the tool and start marking how every single day develops, right? Let's have a look at AU. So what we have today is a very trending Asian range, right? So it actually opened bearish and massive pump into the highs. I also think the pips were, 40 pips, definitely trending. So what I want to do is potentially to take a trade from here. Again, the market opened, it did not give me a long right there, so that's fine. Okay, we did not get a setup. What happens right here? Asian range is ranging. We get the push outside that causes a break of structure. Then we have a pullback into where? The Asian range, right? So this was the trending, but with a break above. So this is variant 2. Once again, break above, retest, break above, little retest right there. You catch the longs, okay? This one is strange. It's pretty, again, as I told you, Aussie dollar is an Asian pair. So you will have bigger Asian ranges on that pair. And as you can see on this day, it was trending. It just continued to trend, and then London and New York actually chopped around, right? So not much to trade during that day, okay? This one again is huge. There is another very trending one, and what happens during the hunt hours? We gave a little pullback, then targeting the Asian high right there. Then we ended up actually pulling back deeper into the Asian range and ended up making a new high, okay? There is another, on AUD/USD, you're gonna see mostly trending Asian ranges. So there is another very trending one, even continues to make a new high. So what you want to do is you want to spot some sort of a level to trade from. There is the level, hunt hours, tap, where is the target, the high. And this is, I think, the trending variant 1, right? Which actually pulls back into the Asian range and then it goes, okay? So I'm gonna wrap it up here. I think you know how to actually study those examples. Right now, it's your task to actually go on the charts and utilize what I taught you. Also, I really recommend that you go back and rewatch the video, take note of those concepts that I shared, print them out, study them, and of course, remember to practice market structure and trend identification. If you're really looking to actually take your trading to the next level and study all the details that are going inside this kind of strategy so that you actually know how to enter the market as well, join us in the community. We just had an amazing revamp as well, and you're gonna learn absolutely everything from A to Z. So definitely recommend you to do this. Check all the links down in the description, right? And again, hopefully this one was insightful. Please let me know down in the comments if it was. Hit the like button and see you on my next video.